Good evening and welcome to this session of the virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Good evening and welcome to this session. Today, since we are almost at the fag end of the topic appointment and remuneration of managerial personnel, I thought we could review it by way of questions and answers. Okay. So I don't know how many of you are out there. Usually I'll get some greetings on the query pad. So I'm not aware. Anyway, so long as people are there, let us go through these questions. I would give you an opportunity to answer. Suppose you give the correct answer, then great. Otherwise, I will explain the correct answer to you, right? So we have Kaushiki here giving me a greeting. Thank you. We have Ms. Charna Agarwal talking about SEBI and all. I'm very, very afraid. My hands are shivering. Let us see what she wants to say. Good evening, sir. Under SEBI, different limit is provided for the profit percentage and thing. So in case question comes, then I'm not aware. Under SEBI, are they fixing the managerial remuneration? I have yet to see it. Maybe there is. But I don't think under SEBI, they are fixing the managerial remuneration. So SEBI, I don't know. I understand what you are talking about. Limit. I'm seriously, first of all, my SEBI knowledge is very little. But given that I'm unable to remember any provision in the SEBI LODR, because SEBI deals more with public issues and listing and trading in shares. To my knowledge, it doesn't interfere with the managerial remuneration. Even the listing agreement does not interfere with the managerial remuneration. That is governed only by the Companies Act. So your question is unnecessary. I don't know, vague. So kindly tell me which provision in SEBI gives a profit percentage for fixing managerial remuneration. Kindly help me there. And one more thing, your question is not about that. Your question is, in case question comes, then we have to write both. No. Usually when they ask the question, they are very, very fair. They will give you whether they want the answer under Companies Act or under SEBI or whatever. That much the institute will not play games with you. So in case the question is pretty vague, and if there is an overlap between these two provisions, which I doubt, I'm not able to think of a provision in SEBI that prescribes profit percentage for managerial remuneration restriction. So I'm unable to think of it. So kindly don't worry about all these things. Today, I was going through some queries raised by students. I was very shocked and surprised because the type of unnecessarily convoluted worries and confusions that students get into, I'm not seriously able to understand. Why? It's all simple, fairly simple topics. Minimum, and the beauty is students who ask complicated questions, trying to confuse the sections and confuse themselves, are not thorough in the basic part. I'm sorry to say they are not thorough in the fundamental part. See, those data, those knowledge that is compulsory, they don't know. But that which is very vague, which is very, 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 very small and not relevant, there they will go and raise complicated queries. All that is going to come to you later in your professional career, Baba. At that time, you handle all that type of, one situation will happen only once in, 35 years of practice, I have seen rarely 3 cases where one-off situation. If that cannot become a question in the examination, you're able to understand. So if you try to, which is good enough, goes to the exam, minimum English, if you understand it is enough. The questions are fairly simple. And when they want to answer in company law, they will say company law. When they want an answer in SEBI, they will say SEBI. Okay. I'm yet to get any response from Jarna ji on the specific provision in SEBI. Just give me a hint. Which part of SEBI prescribes profit percentage for managerial remuneration? I will be educated today by you. If so, then even then my answer is simple. If it is SEBI, they will say SEBI. If it is company law, they will say company law. If there is an overlap and this provision is covered, this concept is covered in both, write both. Since you are a highly brilliant student, you know both, write both. What is wrong? Why take a risk? Write both. If I were in your position, I will write both. Okay. I hope you got my point, Ms. Jarna. Still, I'm yet to get, at least you confirm that you have understood my answer. Okay. Don't mistake me for being a little insistent on this, because It is easy to ask question. Do you know how difficult it is to answer questions? And in the examination, our CA examination is not, if only, I would love that the institute should put question like this. Please raise 3 relevant questions on managerial remuneration. That's all. All of you will get 100 because you people know how to raise questions. Unfortunately, institute, you will get mark only when you answer the questions, which means you should have fundamental knowledge, principal level knowledge of what the provision is, why it is there, then the details of the provision. Sometimes, thanks to the new law, there may be a little ambiguity in the way the thing, in which case, I do agree. Many questions asked in the exam and in the institute material and all, possibly due to inability to use the English language, no other reason. They are vague and ambiguous, not intentionally, but because the people who, I don't know, because see, I think most of the time, most of us, we think in our vernacular, or our mother tongue or whatever you call it, and then we translate it into English. In that, in the translation laws, there is an element of miscommunication and ambiguity. So, which means if you want to become an expert in law and get more marks in law, you should improve your English. Unless you are writing in Hindi. If you are writing in Hindi, also be careful. Because law requires precise language. You can't use vague language in law. Even if you are using in Hindi, the way you write should be precise. If it's a little ambiguous and vague, your answer will go wrong. So be careful while you are writing answers. Madam, if you tell like this, I'm not an expert in SEBI. I'm not at all happy with this approach. I am not teaching SEBI now. Okay, how will I know 17.6? Seriously, I don't know. I'm pleading ignorance to you. I'm a Buddha. I don't know anything. Okay, you are a brilliant person. You know both. Write both. That is all. My answer to you. If you know both, write both. If you think the question involves both, write both. Okay, because there are so many SEBI regulations. Which regulation? At least that you should tell me now. There are so many SEBI regulations. You got takeover code is there. You have LODR itself. The basic LODR is there. Okay, maybe see there is some overlap there. I'm not denying that overlap. I really don't know how you have understood it. Anyway, what I will do now, I will not totally say you are wrong, right, and all. I will simply make note of your doubt as it is, and I will try to look up that particular provision. Seriously, which regulation? Can you help me, madam? You said regulation 17.6. Is it in SEBI? Which regulation in SEBI? Can you help me there also? Which regulation? See, there are many regulations, like, for example, here we have, in every chapter we have rules. So if you say rule 16.2, how will I know which rule? So kindly tell me which regulation also, if you can. Okay, Jarna ji? Chalo, no problem. Okay, but your basic question is different. It's not about SEBI or company law. Your basic question is, let me read that. In case question comes, which is, then we have to write both. Yes, you have to write both. So the answer I've given you, but still I'm out of curiosity, I'm asking you, kindly educate me again by telling me which regulation. Be my teacher. I have absolutely no shame in accepting that I am wrong. I will never get angry. When somebody says that I am wrong, now I will be happy because I can learn. So give me an opportunity to learn. When I'm ignorant, I'm happy because that gives me an opportunity to learn. Okay, allow me to learn. Tell me which regulation. Okay, and good. Now we'll move on. Now, Jarnaji, be careful. I'm going to start giving you questions on managerial remuneration. So I'm looking forward to answers from you. Okay, on this topic, which is purely on company law. No SEBI. I don't know SEBI. I mean, I don't know SEBI now, but if I have to teach SEBI, I will know SEBI fully. This is the trick you have to learn, not getting confused, but in being clear. Anyway, good. So I'm still yet to get your response, madam. Kindly tell me which regulation. Under SEBI, which regulation? If it is basic LODR, I don't know. I don't want to take that because I'll have to go and refer to it. Okay, that is what. Chalo, moving on. We are now going to see some questions in this. Okay. While we are doing that, let us look at the question first. See, this is a case study based question, meaning I'm going to give you a case study. This case study, you have already seen it. You have already I have already given to you in an earlier topic when we were discussing retirement of directors by rotation, retirement of directors by rotation. There I gave this, but here I am extending it for managerial remuneration. Same board, but no managerial remuneration. So we have the same three people, Vijay Adekar, Vimala Adekar, Vikram Adekar, MD, 2 WTDs. Company can have 2 WTDs. A WTD cannot be in another company. Okay. These are, as you know, non-executive directors. Plus you have Wagmare also, casual vacancy. And then 5 independent directors and Narsimhan, all are non-executive. So 3 executive directors and 1, 2, 3, 4, 5, 6 plus 5, 11 plus 1, 12 non-executive directors. Okay. Out of that, 5 are independent. We'll be seeing it in this current today's topic. We'll be seeing it. Okay. Now, the company would like to reward its directors well, but in accordance with the Companies Act 2013. Note it, Companies Act 2013. During the financial year ended 31st March 2019, the company made a net profit before tax of rupees 750 crores. This included rupees 150 crores being profit on sale of land belonging to the company at Pune. So there are 3, just make a note of this, my dear friends, humbly requesting you to make a note because I may not be able to come back and forth. So 31st March 2019, net profit before tax 750. Before tax is what you have to consider because if tax is reduced, you have to add it back. Therefore, we are taking before tax. Okay. Now, this included rupees 150 crores being profit on sale of land belonging to the company at Pune. Capital profit. I think you know what is to be done with that. Now, so 19 ka profit, 750, 150 includes 150 capital profit. Financial year ended 31st March 2020. Company made a net profit before tax of 900 crores. Wow. Okay, but the pre-tax profits for financial year ended 21 fell to 500, possibly due to pandemic effect. Due to pandemic effect, it came down to 500 crore. So 19, 750 including 150 capital, 20, 900 crore, 21, 500. I've also given the balance sheet. Balance sheet. Okay. Humble request. Humble request. Suppose you have your mobile phone, take a photograph of this and keep it. Humble request. Take a photograph of this and keep it. Okay. Or else, if you have a paper, quickly take this down. Quickly. In a very, very rough sketch way. Main items which are important for us, obviously, why is the balance sheet given? The balance sheet is given because we may have to use it later for some purpose. Okay. Could be obviously to calculate effective capital or something. So just take down. You have equity share capital, you have preference share capital, you have securities premium, you have general reserve, you have P&L, and you have revaluation reserve. So this is the shareholders' funds. Equity, preference, securities premium, general reserve, P&L, revaluation. There is some debt also. This is not the Schedule 3 format where we use non-current and current and all. Here we are just giving you debt, 10% debentures, term loan from IDPI, cash credit from SBI, 80, current liabilities and provisions, 180. Right? On the fixed asset side, you have non-current investments, 625, current assets, total, both sides tallying 2410. Right? So, now, the 3 executive directors were appointed under Schedule 5. Wow, that's a good thing. Read with section 197 of the Companies Act 2013. Okay, in 2018. So they were appointed in 2018 at the following salaries. So at the time of appointment under Schedule 5, we have given Vijay Adekar 1.5 crores per month. Believe me, this is nothing for the MD of a large company. And remember, what is the type of profit that this company is earning? 750 crores, 600, 900, 500. So totally how much you will be paying him? 18 crore at the end of the year. 18 crore is chicken shit when compared to the type of money that this company is making. At least it made in 19. Vimala is of course entitled to another 50 and Vikram to 25. So totally as a family, they are getting 2.25 crores per month. Just sufficient to maintain their lifestyle, we hope. Okay. So total 2 point. Now, this is the situation. First question. This is for financial year 2019. The company would like to pay Mr. Vijay Adekar a commission based on the profits for the financial year 2019, computed in accordance with section 198, in addition to the salary already fixed. So, in addition to the salary, my dear friends, please understand the question. Question has to be understood. Okay. They want to pay him commission based on profits in addition to the salary. So, what should you do? I want you to tell me the answer. I'm waiting for your answers. Because if you give me the answer, I'll be happy. Otherwise, I will give the answer. Don't worry. Just for your memory, the profit for 2019, 750 crore, which includes 150 crores. Sale of immovable property, sale of land belonging to the company in Pune. Yeah, looking forward to your answers. Kindly give some answer, any answer. After all, luckily, this is a multiple choice question. You have only four options already. You have to only choose. A would be an obvious answer, right? Because one MD is entitled to 5%. Am I correct? But the question is not that. They want to pay commission in addition to salary already fixed. So the total, the 5% is not the commission which you can pay. 5% is the, see, Viraj Desai immediately rushes to give me A. See, Baba, A is 5%. That is the limit already. That is the total limit. Whether you pay by way of salary or whether you pay by way of commission, whether you call it fees, whatever you call it, the total remuneration, including perquisites, the total remuneration that you can pay to this Vijay Adekar cannot exceed 5% of the net profits computed in accordance with section 198. Okay. Now Sriram gives me an answer. He says C, 2%. Wow. Sriram, hats off. Hats off. How he gets it? How he gets it is exactly how I have got it. So I will show my answer now because Sriram has given the answer at 2%. Hey, we have two Agarwals here. No? There is one Jarna and one Janvi. Okay. So Jarna, SEBI expert. Janvi says 3%. Let us see. You know, I used to teach SEBI in those days. SEBI was my worst nightmare. I used to just skim, and that too in SEBI also, I'll give the important topics in SEBI. Believe me, out of that, 2 questions will come. But still, students will be confusing them in SEBI. They will get, I say, SEBI, I'll give them 15 questions. Maximum, all the 15 I'll cover. These 15 you be thorough. The chances are probably high, you will get 1 out of it or 2 out of it. You'll get 2, 1 and all. And they will answer. In fact, but still, they will think SEBI is tough, sir. Will you cover this, sir? Will you cover that, sir? I'll say, look here. I've covered what is necessary for the exam. You don't. They won't believe. They won't trust the teacher. Anyway, SEBI, actually, there are only about 15 important topics. You know them well. The rest of it is shh, no need to know. Don't tell that I told you. Huh? Read everything. Okay. How did Sriram get the right answer, which is 2%? Mr. Vijay Adekar is eligible for a total remuneration of 5% on the profits. Under 198, we should not consider capital profit. Therefore, we remove it. Less means 600. On 600, he is eligible for 5%, which is 600 into 5% gives me 30 crore. You are already paying him 18 crore now, so we reduce that. Correctly done. Already paid rupees 18 crores. So balance payable 12 crores. This, if you calculate it as a percentage of profit, meaning 12 by 600 into 100, you will get 2%. So the answer is, as a percentage of profit, commission based on profit, you can pay him another 2%. Okay. How Janviji gets 3%, I'm not able to understand. Okay. Thank you, Sriram, for a wonderful answer. I love you. And this is exactly how you should write. Do well. I'm telling you, this is exactly what you should be doing in the exam. Though for MCQ, they may not ask you for explanation. Still, the way you proceeded is good. You can always retrace your answer and find out where you went wrong. Chalo, no problem. Now we go off. Second question. This is very, very easy. Easy peasy. All of you are going to get it right. I'm going to be so happy. But note it, it is for the year ended 31st March 2020, when these guys made 900 crores. 900 crores. Profit. That is before pandemic started. Remember, pandemic started. Technically, our problem started on 24th March 2020. Yeah. The maximum remuneration that can be paid to all the non-executive directors, including independent directors. Remember, whatever is payable to non-executive will be paid to independent also, and will be paid to that Narsimhan guy, that small shareholder wala. He will also be paid, included in that. Don't worry. This thing, he is also eligible. Why? Because small shareholder director will be treated as an independent director. Whatever available to independent will be available to him. Wonderful. Kaushiki is giving me the answer 9 crores. Wonderful. So happy. Let's see. 1 or 2 more people will concur with you. Looking forward to more answers. That's why I said this is very, very easy. 900 crores remuneration payable to all part-time directors when there is MD. Here MD is there, 2 WTDs are there. So you can pay only 1%. On that 1% of 909 crores. Beautiful, beautiful, beautiful. Kaushiki ji, thank you. Thank you, thank you. Sa, Rajesh Sa. Okay. Say it Sa. I know a lot of people named Sa. I think you are from Gujarat or from Kanchipuram, because there are a lot of Sa's from Saurashtra. They are in Kanchipuram. They are engaged in the silk saree business. You have a lot of SAH, Sa's, not Shah, Sa. Beautiful, beautiful, beautiful. Here is the next question. This is a little lengthy. You'll have to do a little bit of computation. So note down the answer if you can, if you have already. Yes, thank you, Sriram. Beautiful, excellent. See, only you have to add one more point, Sriram. All non-executive directors, maximum remuneration is 1% where there is an MD or WT. Otherwise, it will become 3%. If where there is no MD or WTD, 3%. Now, we have to calculate effective capital. Oh, shit. Anyway, if you can do it using, if you have taken a photograph of the balance sheet, that's all you need. That's all you need. What is the effective capital? That is all question. Shall I go back? This is as on 31st March 21. See, these questions were prepared by me last year. Okay, I think 22 end or something. 21 end or 22 early 22. That's why it is. I can always update it for 23, but I've not done it. So you have to consider now. See, we have to take paid up capital, equity, preference and equity, securities premium, general reserve, P&L, revaluation, no. Debentures, term loan, cash credit, short term, no. Current liabilities, no. Okay, so If I have any answers, I'll be happy so that I can. Don't worry, boss. In the classes, there is no need to worry about being wrong. Nothing wrong in being wrong in a class. Okay. So if you prepare well, make mistakes only, you will learn. That is why you should work out what you know. Don't mug up the practice manual. Take the practice manual, read the question, write out your own answer, then verify the answer given by the in the book. You will learn better. When you make a mistake now and you read the right one, you'll make it. But I see one thing. Many people are telling 2155 crores. Sriram gives me 2155. Shareholder fund plus long-term debt not to consider revaluation. Current liabilities. Total of all others considered. Beautiful, beautiful. Viraj and Sriram have only seen the, I think, liability side. Whereas Janviji is looking at the asset side also. Let us see now. Kaushiki ji is yet to give me an answer. Okay. I also notice one thing. When I am a little tough with a student and I give them some negative way of telling, they get angry and they never respond after that. Earlier, we had one student who was talking about the donkey and all. I kept telling she never after that involved herself in the discussions. No, that is not fair. For all, this is a class. Enjoy. What is there? I told something. Forget it. After all, who is telling? Teacher only telling. See, three people, in India are sacred. Mother, father, teacher, God. God you have not seen. Mother is the God right now available. Go and see. Otherwise, father, another God. Guru, if you so desire, you can treat as God or at least as a respected person. When that person is telling something, you should take it seriously. Okay? Take it in the right spirit. Move on with your life. That's the point. Okay. Let me do one thing. Let me show you the answer. So, the only thing that has not been considered is your investments. Sriram has considered everything else. So, equity, except revaluation reserve, he has taken everything else. Here, except current liabilities, he has taken all. Okay? He is getting 2155. Okay? 2075 you will get. Okay? 2075 is not a valid answer. Namrata Surve is joining us a little late. Welcome, madam. So, that non-current investments need to be removed. Why we have reduced? If you remember my session yesterday, they very specifically excluded non-current. Reason, these liabilities or these sources are also partly funding that non-current investment, which is not invested in this company. It is invested outside this company on which the MD does not have any control. The decisions taken by him will not influence those non-current investments. They are in some other company's portfolio, whatever. The performance of that portfolio is different. Okay, so therefore we are ignoring. See, even if you are going to do an ROCE for this company, return on capital employed, you will remove the from non-current from this because think about it. In a way, you know what you're doing? You are calculating the operating assets. This is a non-operating asset. So to the extent that it's a non-operating asset, the MD or WTDs have no control over it. The directors, their decisions cannot influence the non-operating assets. Therefore, only the operating assets have to be taken. That is the logic of why the law wants you to remove non-current investments. Do go back to my lecture. yesterday. I will be uploading the PowerPoint as of today or maximum tomorrow. For when you will, I will also upload this so you can go through it. So 1450 is the correct answer. Okay. Cash credit is not a long-term borrowing. It is treated as a short-term. Okay. What you're telling is correct. It will be there with us for a long time. I agree. But there's a small difference. You see, a term loan is payable after a specific period of time, which is more than 12 months. Whereas a cash credit is also known as an on-demand loan. On-demand loan means in case the bank demands, we have to pay back. It's called on-demand, which is why if you go to your definition of current assets and current liabilities, cash credit is a current liability because it is on demand. It is not repayable after 12 months. It is repayable the minute they ask, anytime. And we do not have the option to postpone it at our own will. If they ask, we have to pay. Therefore, cash credit should be treated as current. Okay. This is not only here. When we go to powers of directors, you will find where the amount where the borrowings exceed paid up capital and free reserves, there they will say temporary loan. Other than temporary loan. For temporary loan, they will say any loan which is repayable after 6 months. If so, on-demand loan will not be considered because it is repayable immediately. There again, don't get confused. Don't ask their cash credit is long-term. It's not. See, some people have this feeling that cash credit is long-term. It is not. It is on-demand. Okay, so it is short-term funding. Also, cash credit. See, if you are going too deep into finance, I can tell you, cash credit funds current assets. So in that way also, if you match it with the assets that are funded by it, it is funding short-term assets. Therefore, it is a short-term. Okay. Chalo, this is my humble view. Then if you still feel, oh, which is why you got 2155, I don't know. I thought you had excluded not to consider revaluation, reserve and current liability. You have not considered cash credit. Cash credit also to be taken as current. Department loves multiple choice. Kyun? Because correction is so easy, huh? But very dangerous for the student in the long run. Because suppose the institute has decided that the answer is 1450. Now, your logic will never be known to them. They are not going to correct you at all. No chartered accountant is going to have a look. No company law teacher or expert is going to look at your answers. One dumb machine called OCR, you're going to be fed. That thing is going to be fed and they will correct. Or blindly they will have A, B, C, D answer for question number 3. Paper setter would have said B. Though D can also be right, it will become B. But at least in our institute, MCQ is only part of it, not the entire paper. Therefore, it won't be under OCR. And there is a very good possibility that suppose there are some doubts, the chief examiner would decide. At the time of correction, they will decide whether this is correct or that is correct. And then they would come to a conclusion as to whether this is right or wrong. But in this case, 1450 is the correct answer. Okay. Okay. I have used the word unanimous resolution in case it was not discussed in the class. For your information, unanimous resolution means a resolution agreed to by all present. A resolution agreed to by all present. During the financial year ended 31st March 2021, it is proposed to appoint Mr. Vikram Adekar as a managing director of Adekar Ancillaries Limited. Remember, we are continuing with the case study. This is a case study based question. So the case study is still to be kept in mind. You cannot, this question is not independent of the case study, right? The case study had Vikram Adekar as the managing director of Adekar Industries. Now, it is proposed to appoint Vikram as MD of Adekar Ancillaries, a company with an effective capital of 150 crores, in which Adekar Industries Limited has 40% stake. Chalo, that is not a problem. Okay. It's a group company. No problem. Associated enterprise. Forward. Now, what is the procedure for this? See, we are going to appoint him in Adhikar ancillaries. What is the procedure? Any answers? A special resolution passed at general meeting of Adhikar Industries 4A. Ordinary resolution passed at general meeting of Adhikar. Unanimous resolution passed at the board meeting of Adhikar Ancillaries Limited. Unanimous resolution passed at a board meeting of Adhikar Industries Limited. Luckily, I am giving these questions and I am asking you to give answers. See, my mistake. Maybe some miscommunication yesterday. Means in a hurry to finish it, maybe that was the fag end of the class. I gave the wrong impression to you all. Right? So you have selected option D. Sriram, what is your view? If you are still there, hi, what is your view? Share your view. Madam, yay out, madam. There is no special resolution. See, we have already appointed him in Adhikar Industries. He is already there. And we appointed him under Schedule 5. You remember? 18 itself we have appointed. He is already appointed there. So why pass another special resolution there? Okay. Again, members have nothing to do with this. Sriram, waiting for your answer. If at all you have one. If you have no answer, also kindly help me and say, sir, no answer, you could proceed. So that I will know that you are not getting into this. Okay, see, you think about it. Which company should be more concerned about this? The company which is appointing him as MD for the second. See, this gentleman is already an MD of Adhikar Industries Limited. Now we are proposing to appoint him as MD of Adhikar Ancillary. Now this Ancillary board has the option. They can either appoint him or not appoint him. If they feel that there is a conflict of interest. See, in this case, there is no conflict. Vikramji is, for all you know, it is he who promoted this and he whose idea and all. Here there is no problem. But there could be a situation where, Sriram, thank you, waiting for that. Oh, you're typing out a huge essay type answer. That is why it took time. Yeah. See here, suppose there is another situation where Mr. say Unscrupulous is already an MD of one company. Okay. Mismanagement Limited. Now that same Unscrupulous, we are going to appoint in our company as an MD. We know that he is a known criminal. And that fellow becomes a damn MD here, he will do some nonsense. So we are not happy about him being MD in Mismanagement Limited and also in our company. Therefore, the board of directors of the second appointment company. Repeating, the board of directors of the second company. In this case, it is Adhikar Ancillaries. They have been given the right. In case even one director is saying no, then he cannot be appointed. So what is required is a unanimous resolution passed at the board meeting of Adhikar Ancillaries Limited. C is the correct answer. Your absolutely answer is correct. Let us see your logic. A unanimous resolution passed at board meeting Adhikar Ancillary. Reason, at the board meeting, all the members of the board of directors of Adhikar Industries shall authorize. Absolutely. Your answer is correct. Reasoning is, maybe I didn't stress it yesterday. Now I'm giving you the reasoning. That is, see, in the second company only we have to be careful, because he is already MD of a company. Now, for example, let us say that one big industrialist is MD of a company. Obviously, he'll be MD of his own flagship company. Now we are appointing him as MD in another company. We feel that, hey, this fellow will come and do some nonsense here. No, we should not have him. Then even if one director, remember, he is attending and voting, or even if he keeps quiet, he doesn't vote, the motion is defeated, because the resolution should be passed by, it should be agreed to by all the directors present, all. Even if one says, I'm not voting, gone. Even he need not vote against. Even if he does not vote, gone. An independent director can simply protect the company by keeping quiet, not doing anything. This power is given here. Same provision you will find in 186 also. When I come there, I will again tell you. So the correct answer is C. Okay. Maybe yes, it is my mistake. Luckily, we took this up, so I can explain this to you. So, a unanimous resolution passed at a board meeting of Adhikar Ancillaries Limited. Okay. The second company board should pass an unanimous resolution. First company already we have appointed. A is not correct. B, no, because members have nothing to do with this. Unanimous resolution of the second company, not the first company. Okay. So always remember, when a guy is to be appointed as MD in a second company, then there should be the second company would prevail. Okay. Okay. One more thing arising from Jarna's question. There are some provisions that apply to listed companies under SEBI guidelines. Certain special procedures need to be followed by listed companies. So if the company is a listed company, then SEBI guideline will be prevailing over Companies Act. It's just for information. Nothing to do with Jarna's question. That is different. But again, to answer another way of approach, wherever SEBI is involved, SEBI will be the, you might know this also. All listed companies, are governed by SEBI. So, to the extent that there is a conflict between SEBI and Companies Act, if there is no conflict, SEBI will prevail for listed company. If it is a listed company, SEBI guideline will apply. Are you able to understand? SEBI guideline will apply, not Companies Act. So, as a general principle, I'm telling. Okay. In specific instances, we might have to have some issues, but generally, because for listed companies, there are many other controls, not just Companies Act. Once you get listed, you will sign a listing agreement with the stock exchange. So that listing agreement also is there. If the listing, for example, under the listing agreement, they may prescribe certain things. That will be superior to Companies Act. Okay. But always remember, those provisions will be more stringent than Companies Act. More stringent than Companies Act. Right? Similarly, SEBI guidelines will be there. But generally, my knowledge, SEBI does not get into the nitty-gritties of corporate management. They do not prescribe, but they give some broad rules. Listing agreement has, for example, normal board meetings rules will be seen, but for listed company, there are more rules, which are not given by SEBI. They are part of the listing agreement that the company is signing. So they have to obey, because listing agreement is binding on them. So long as they want the share to be listed on the stock exchange, they have to comply with the listing agreement. It's more of a contractual obligation rather than a statutory obligation. Okay. That is always there. That is always there. Okay. But I think the crux point here, Kaushiki ji, is if you want to appoint a person as an MD in one more company, then that second company board should pass a unanimous resolution. Thereafter, the normal provisions for appointment of MD will take over. But this is a specific provision for appointment of a person as an MD in the second appointment. Okay. Sorry, sometimes I talk unnecessarily a lot, but think about it. I don't know how many of you are, whether I told you or not. I'm also a Master of Science, MSc in psychology. So sometimes I think as a corporate trainer and psychologist also, I see most of the time students hate being wrong. Okay. In their eagerness, not why students, people hate to be wrong. People hate to accept that they are wrong or to know that they are wrong. So somewhere we always want to justify ourselves and say, hey, still I'm right. After all, the shareholders of ancillary should approve it later. You're right. But see what happens here. Okay. So don't worry. Being right is important, but knowing is more important. Knowledge is more important. Okay. Learn the subject well. Automatically you will be right every time. Okay. You will be right every time. Don't worry. Nothing wrong in being wrong once in a while. Nothing wrong in being wrong once in a while. Nothing wrong in learning from that. You know who is the most pitiable person? Not the person who is wrong, but the person who refuses to learn. The person who is wrong and says, I was wrong, now I know, thank you, moving on with life. Instead of saying that, no, that will be like this, that would have been like this. More so, my dear friends, don't mistake me for telling this. Okay. You are wrong. See, again and again, I'm telling you, being wrong, right? This is not the forum. This is the forum for learning. The real forum where you should not be wrong, my dear friends, is in the exam paper. There, be careful. Okay, there, be careful. For that, in these situations, don't be closed-minded. Be open-minded. Listen, accept, learn, grow. Suddenly, you'll find you're fully prepared for the exam. Okay, winning an argument with your own teacher, no use. Getting rank in the examination, you should do. That is different. That is difficult. Okay, I have never argued with my teachers, or rather, I have never tried to show that my teacher is wrong, even when sometimes my teachers were wrong. I've been very humble and polite. Sometimes in extreme cases, after the class, I will go to them, sir, section says like this, sir, I still have some doubts, sir, what to do like that. Then they will say, hey, Shrikant, you're right. Like that, many of my teachers became very close to me because they know this person did not openly point out that I'm wrong. He had the Guru Bhakti and the clarity to come after the class and point out. Then they will thank him. So, I mean, these are all things, in those days it was all possible because that was the culture in those days. Today the culture is changing. Good or bad, I do not know. Maybe it is good. Maybe this is how it will be in future. Okay, fifth question. But up to now, consistently, Sriram is batting almost 3 out of 4 correct. But for that one question where, there was a difference of opinion, which I hope my opinion was taken as a part of it. Not opinion. What I told is the correct answer. This is a little difficult. See, we have appointed Vikram Adekar in Adekar ancillaries. Now, at the end of the year 21 March, Vikram is have to get from both the companies. Now, we are not going to pass a special resolution. Therefore, it will be limited to Schedule 5 and 197.1. So, based on effective capital, Adekar Industries' effective capital is how much? 1450. 1,450 crores. That means you can pay him how much? Beautiful. Correct answer, Kaushiki. Absolutely correct answer. That is, he can, remember, just try to remember the section. He can be paid the maximum limit applicable to any one company from both the companies. He can be paid the remuneration as per the maximum limit between the two companies, but that maximum limit would be applicable to both the companies. So it won't be A plus B. It will be A or B, whichever is higher, he will receive from both. Okay. You have to see what is the remuneration you can get from A, that is Adekar Industries, then how much from Adekar Ancillary, whichever is higher, he can get it. This can be distributed between the two, and that is 25 crore. Why? Because 5% of 500 crore, that is for 21 March, the profit is 500 crore. So we can pay him 5%. Or rupees 1.20 crores, which is the maximum payable under the Schedule 5. So you can pay him, but it is better to go for 25 crore, right? Or rather, you can pay him maximum, which is 25. Actually, you are also correct, because it's exceeding to 250 crores. It's exceeding 500 crores. Therefore, he is also entitled to the 0.05%. So that has been correctly calculated by between the two companies will be the limit. He can get it from both. But what he cannot do is to get 25 from Adekar Industry and another 1.32 crores from Adekar Ancillaries. Okay. So, correct. Maximum remuneration being aggregate of all companies in the... No, Sriram, don't go there. The way you've written it is a little dangerous. Maximum remuneration being aggregate of all companies in which the person is MD. No. Calculate for Adekar Industries separately. That is what you have done. You have done the calculation correctly, but the way you have written is wrong. So you calculate for Adekar Industries one thing, which is 25 crores straight away. Then you calculate for ancillaries. Ancillaries, okay, we are given the effective capital. We really don't know what is their profitability. But ancillary is 150 crore. 150 crore means he is entitled to, 1.2 crores. Right? Because 150 crore, now you go to the effective table, you will find that he is eligible for 1.2 crores. Right? 1.2 crores. But between the two, whichever is higher, you can pay, which is 25. Okay. Suppose it exceeds 500 crore, then effective capital exceeds 500 crore, then he is also entitled to 0.01% of the effective capital in excess of 500 crore. Just be thorough with the table, Baba. The effective capital table is there. Be thorough with it. Here it is 1.2. So it's either 1.2 or 25. He can't get both. He can only get maximum of 1.2 or 25. Here, maximum is 25 crore. He is eligible to receive that. Answer is correct, Sriram, but the way it is. It is not 1.2 crore, madam, because see, ancillary effective capital is 150 crore. If you want, we will do one thing. 150 crore, we will read it in the table. After all, what is there? We can just refer to the table now. Just give me 1 minute. 150 crore is the effective capital of ancillary. Am I correct? So, let us see. Sorry. Quickly, we'll see the 150 crore is effective capital, right? So, for effective capital, we have to see the table. So, here is the table for effective capital. 100 crores, but less than 250 crores. He is eligible for 1.2 crores. Yearly remuneration, 120 lakhs, which is 1.2 crores. We are reading. It's only when it exceeds 250 crores that you are getting 1.2 plus 0.01%. Okay. Okay. 24 yearly permits. I don't know how you are getting all your numbers. See, Adekar Industries is having a profit of 500 crore. On that, they are eligible for, he is eligible for 5%, 25 crore. In the case of Adekar Ancillary, effective capital is given. That means it's a loss or inadequate profit. Therefore, we have to calculate based on table 150 crore effective capital, you are eligible for 120 lakh per annum, 1.2 crore. Okay. Between the two, you have to see whichever is higher, and that you have to take it. Okay. That is how you have to. Very good point you are making about Vikram is not MD, but this percentage of 5% is for MD also, WTD also, and the Schedule 5 format is for MD also, WTD also. Okay. It's a good point. Okay. Good. You made a very valid point. Okay. And that double appointment also is MD, WTD, M. You can appoint here. Okay. Sorry, see, I'm not saying managerial person. If you ask me, I'm teaching 3 topics: appointment and qualification of directors, appointment and remuneration of managerial personnel. Today, we are going to start board meetings, meetings of board and its powers. If you ask me which is the toughest, I will say managerial personnel and remuneration, because not toughest, most confusing. So only when the topic becomes confusing, we have to be very, very, very clear. Okay. That clarity should come only when we read it again and again with intention to understand, not with intention to confuse ourselves. When you read, read to understand or read to give conclusion rather than read to confused. 25 crores, but I correct my answer using maximum remuneration 5%. No. Okay. Chalo. Now, one more question is there, or rather, a few more questions. I think 1 or 2 more questions are there. We go back to now the case study over. Our friend Vikram and Vijay and all, we will say goodbye. Members of Zootopia Industries Limited finally managed to remove Mr. Akrosh Sin and his cronies. A board consisting only non-executive directors with Ms. Kara Ghosh as chairperson and Chamakdar Lomri, others is formed. There is no managing or full-time director or manager. At the end of the year, the company made a decent profit. Decent profit. Don't ask me how much. Decent. And sometimes when you ask what is the groom earning, it's a decent salary. You'll believe. And the board members would like to take some remuneration. The maximum percentage that can be paid out of the profits to them is how much? This is too much. This is not a question to be asked to a group like you. Already well aware of managerial remuneration questions. Okay, you know the answer. Answer is 3% straight away. Correct. Beautiful. Last question, I think. This is the last. No, still some more are there. Mr. Nahush Shah is already an MD in Omni Industries Limited and Omega Traders Private Limited. It is now proposed to appoint him in Micro Industries Limited as MD. Which of the following is correct statement? He is already MD in Omni Industries and Omega Traders Private Limited. Now you want to appoint him in Micro Industries Limited. What is the procedure? Beautiful. Thank you for the answer. Now, 7th question. See, a person can be appointed as MD, WTD, or M. If he is already in one company, he can be appointed in one more, but not more than one more company. So here also company, there also company. They are not restricting it to public limited company and all. So if you are already in 2, then you can be in only one more. Here, they don't say 2 public companies and all. Nor do they say there it's public-private. Correct answer, Rajesh Shah gives the answer, cannot be appointed. Kyun? Because 7C, correct. Maximum 2, correct. Beautiful. Cannot be appointed. Beautiful. At last, I'm happy that most of you have understood. Finally, we have Gardab. See, somehow this Gardab is coming again and again. Yeah. What to do? Maybe I am hung up with donkeys. I don't know why. I like donkeys, I think. Anyway, Mr. Gardab was removed as whole-time director of R&A Hotels Limited. He was appointed on 1st April for 2020 for 5 years and was removed on 30th June 2021. Just removed, yeah. He has not, see, there are some situations where he cannot be appointed as he cannot be paid compensation. Be thorough with it. None of those situations is applicable here. Okay, so he has earned 18 lakhs up to date of removal. See, here the only extra is the formula that I gave you was in year. Whereas here it is, if you do it in year, you have to take decimal. Instead, if you want whole numbers, you can as well take months. So 1st April 2020 means 31st March 2020, 12 months. April, May, June 21. Totally 12 plus 3, 15 months. He was employed for 15 months. See, 15 months, if you take now, it will be what, 1.25 years and all. So if you want to avoid that, you can take 15. Totally, he is eligible to be for 60 months. Am I correct? You can pay him for how much? 3 years or remaining period. 3 years or remaining period. So total 60 months, he has already finished 12. Am I correct? So balance. Whereas, but you can pay him only for 36. You can pay him only for 36 months. 3 years or remaining period, whichever is less. So, based on the remuneration actually received by him during the period of office. So, he was there for 18 months. Sorry, he was there for 15 months. He earned 18 lakhs. So, 18 lakhs divided by 15 into 36. 18 lakhs divided by 15 into 36 gives me 43.20. 3 years salary. Correct. 3 months salary. See, his total remuneration earned is 18 lakhs. The total remuneration earned is 18 lakhs. Not monthly remuneration. Totally he has earned 18 lakhs during his tenure, which is for 12 months, 15 months. Okay, so 18 lakhs divided by 15 into he can be paid for that remaining period of office or 3 years, which is 36 months, whichever is less. So 36 months. So 43.20 lakhs. Very funnily, 18 lakhs. Wow, that's a really funny situation. 18 lakhs into 3, 54. Very funny. Huh? 43.2 is the correct answer. Thank you. So this brings to an end the questions to be discussed today. Thank you for your active and very, very enthusiastic participation. What I want to do now, my dear friends, this being a logical point, I'm giving a small break now rather than later. Okay. Because once you come back from the break, I will start a fresh topic, new topic. Otherwise, what happens now, we will start the topic and then immediately give a break at 7:30. Instead of doing that, what I will do, thank you, Sriram, wonderfully argued, well-reasoned answer. Excellent. Fantastic, as usual. So we will now have a small break, 7:05. So till 7:15, we'll have a break. 7:15, we'll have a break. Okay. So sir, there's a small break, sir, for 10 minutes. well-deserved break, and we are ready for the new topic, which will start today. This topic supposed to be started in the next class, but since we have made good progress, we are going to start it in this class itself. Going ahead, we are going to have this topic. It's a very interesting topic. Meetings of board and its powers. Meetings of board and its powers. It's a very interesting topic. In fact, very practical also. I would even say this is the dynamics of corporate management. Dynamics of corporate management. See, what you studied in intermediate, management and administration, and this topic together, we can call the dynamics of corporate management. Dynamics. That is, these two topics talk about how companies are managed by the shareholders, meetings and administration, by the directors on a day-to-day management. So here you will find more, shall we say, finance-related issues, issues relating to acquisitions, issues relating to decisions to be taken by the board on a continuous basis. So let us go into the topic quickly. I will also tell you one more thing, which I'll stress more later. We will be seeing the powers of the board. After we finish meetings of the board, we will be seeing powers of the board. Let me assure you that the act will begin by saying that the directors are agents of the company. Therefore, whatever the company can do, the directors can do. But then they will start diluting the powers. They will start diluting the powers of the board, meaning the entire Companies Act is dilution of the powers of the board. Entire Companies Act is dilution of the powers of the board, inasmuch as so many matters can be done only by members by passing special resolution or ordinary resolution. So all classic examples where board cannot do it. So every section where you talk about ordinary or special resolution means board cannot do it. Even where board can do it, there are certain powers which can be done only at a meeting of the board. Certain powers you saw now, we need unanimous. All the directors should agree. Similarly, MD, Managing Director, he has a lot of powers, substantial powers. But there are certain matters which can be done only at a meeting of the board. Meaning, MD cannot do it on its own. Board resolution is needed. So there is so much, shall we say, dilution or reduction of the powers of the board throughout the Companies Act. In fact, the entire knowledge of this topic is where the power is exercisable by the board without any condition, where it is exercisable subject to condition. That is the main knowledge in this topic. If you can understand that and remember it, this topic is easy. First, we have to talk about meetings of the board, means board meetings. So this topic on board meetings, we will discuss under many headings. Frequency, meaning how often, how often we need to have, when we need to have board meeting. Okay. Also, whether board meetings can be conducted through video conferencing. Even when in 2013, we had something called Skype. I don't know how many of you remember Skype. And I'm sure still it is being used in foreign countries and in many corporates. I think they use the paid version of Skype. But today with Zoom, which is available free, many people have not bothered to go for Skype, right? So there are many. 1 second, just give me 1 minute. Rajiv, class la irukke ma. OTP solran oru nimisham takkan solrara. 831 760. 760.
Okay, sir. Thank you.
I'm so sorry, my train ticket, I'm rebooking it. This is a real pain. I'm traveling to Coimbatore on 4th. Okay. So, frequency. Then notice. Just like there is a notice to be given for AGM and EGM, board meeting also notices to be given. Also, quorum. Quorum means minimum number of persons required for a meeting. Quorum. Carom is a board game. CARROM. Carom. Quorum. QUORUM. is, I don't know what we still use. Oh, I'm suddenly unable to relate to your answer. We still use. What do we still use? Suddenly, if you put, we still use, what do I forget? What are we talking about? Suddenly, I'm not able to get the context of what you're telling me. Kaushiki, you need to help me out there. What do we still use? Anyway, Quorum means Skype you still use, is it? Okay, very good. I'm so happy for Skype. The management and directors of Skype, I'm very happy for them. Okay. Quorum is the minimum number of persons required to constitute a valid meeting. For board meeting also, there is a quorum. How much we will see? Interesting topic. Very interesting topic. Similarly, venue and time, meaning where it can be held. Venue, where, kaha. And again, kab, what time, when can hold. Finally, we have agenda. Agenda means the matters to be discussed at the meeting. Agenda. There we will talk about passing of resolutions by circulation. Okay. So, very interesting topic. Let me see, first of all, frequency of meetings. Meaning, how often should the board meet? Regularly means, in fact, listed companies, highly professionally managed companies, the board meeting is held every month. Monthly, one board meeting. Committee meetings and board meetings happen once in a month. It's a very, very important event when the board of directors will meet, the independent directors will come. That day, the company secretary will be from morning 4 a.m. He or she will get up in the morning at 4 a.m. From that time onwards, they'll be, because of course they would have been well prepared, board papers would have been sent, but they don't know which question will come, how it will come. So the entire finance team, the CFO, the company secretary, everybody will be thinking. In fact, if anything happens on that day, the CFO or the company secretary will not, even family matters, will say, no, board meeting, not on that day. Yeah, unfortunately, if children's birthday comes or some important occasion, very difficult, because board meeting is very important. Okay, especially large companies. My daughter is a company secretary, but she was working in not a listed company, but a large company where she was reporting to the company secretary, who was also the CFO. So virtually, she was the company secretary. So whenever the consortium meeting will happen with the bankers, that day, before that day, evening, she'll be tensed. So don't talk to me. Tomorrow, consortium meeting, I have to prepare this, that. She'll be sitting in front of the laptop. That day, full tension. Then by that, finally, they'll have it in some star hotel. Finally, when the meeting gets over, the CFO and my daughter and all will give a sigh of relief and they'll be relaxed. That's how I know this type of tension is there for board meetings and consortium meetings. Because I'm, after all, a ordinary practicing chartered accountant. So I don't know all these things about tension and all that. Okay. Anyway, corporate life, I'm not at all experienced. I don't know how it is. Anyway, so every company shall hold the first meeting of the board of directors within 30 days from the date of incorporation. So the first board meeting should be held within 30 days of the date of incorporation. That is a very important board meeting. Kyun? Because in that meeting only you will appoint the first auditor. Okay, you will approve the preliminary expenses, right? Etc., etc., etc. All the important first items would be done in that year. And thereafter, it shall hold a minimum number of 4 meetings of its board of directors every year. So minimum, that means, I'm not making it a rule. I'm saying 4 means what? In a month, in a year, 12 months. 12 divided by 4 gives me 3. 3 months is a quarter. So in every quarter, you should have 1 meeting. I am not saying that. Act is not saying that. Just suggesting maybe every quarter you can have. The rule given in the Act is totally different. They should have a minimum number of 4 meetings in every year, in such a manner that not more than 120 days shall intervene between 2 consecutive meetings. Meaning, the gap between 2 meetings should not be more than 120 days. So you hold 1 meeting, the next meeting should be held before the expiry of 120 days. On the 120th day, means it cannot be more than 120 days. Okay? In such a manner that not more than 120 days shall intervene between two consecutive meetings. So, I'll be giving an example numerically, or rather, we'll be having an example which you will understand. So, I hold a meeting today, then I start counting 1, 2, 3, 4, 5, 6, 120. So, the 121st day you should hold, or 120, 119, but you cannot hold on 122. So, today, aaj ka meeting over. Then, next day, kal 1, 2, 3, 4, 5, 6, 7, 8, 118, 119, 120, no problem. 121, chalo, because intervening 120 na. 122 gone. Because the intervening time will be more than 120 days. Okay? Got it? Now, one-person company, small company, dormant company, private company. If such private company is a startup, be careful. This is not applicable to all private companies. Only private company which is a startup. That means it should be registered under the government ministry as a startup. You have to go and get yourself registered. Only then it is a startup with the ministry. Okay, Director General for, I think, Trade and Development or something. Fellow should give you a certificate that you are a startup. Okay, so a private company which is a startup. So OPC, small company, dormant company, and private company, if such private company is a startup, shall be deemed to have complied with the provisions of this section if at least one meeting of the board of directors has been conducted in each half of a calendar year. So here they very clearly use the word calendar year. Let me pause here. Or rather, let me complete this and then explain. Nice question asked by Janvi ji. Before that, first let me complete this part. One meeting in each half of a calendar year. So calendar year begins on the 1st of January. So January, February, March, April, May, June. So June 30th, one half. So January 1 to 30th June, one meeting. Then July 1, July, August, September, October, November, December. So December 30th. So that is another half. So one meeting in each half. And the gap between two meetings is not less than 90 days. Here they said not more than 120. So before 121st day, you have to hold it. Here they say not less, means you can't hold. For example, I'll give a classic example. You can't hold a meeting on June 18th. And immediately in July 20th, you can't hold another meeting. And say, I held one meeting in one half now, another meeting in another half now, remaining enjoy. No. Because the gap between these two fellows should not be less than 90 days. So after holding one meeting, another 90 days should be over. In the next half, you have to hold one more meeting. Friends, one more point you have to understand. Please concentrate. This is only minimum number. Nobody is preventing a startup or a dormant or small company from holding private company startup and for holding monthly meetings, quarterly meetings. Minimum, you should have two. One in each half of the calendar year. And the gap between these two should not be less than 90 days. And for the startup private company to enjoy this, they should not have committed any default in terms of filing annual return, blah, blah. Okay, with the register. Again, section 173 and 174. 173 deals with number of board meetings, frequency. And 174 deals with quorum. These two do not apply to an OPC, which has only one director. Think about it, only one director. Okay, what? He's meeting every day to himself. I mean, friends, it's a very, very esoteric point. How will he have a board meeting with himself? Okay. Today morning, I was having a deep discussion with a friend of mine who is a spiritualist. And we were discussing one text called Brahma Anuchintanam, where we were talking about, and there he was talking about Mundaka Upanishad, where talks about the two birds. One bird is eating the fruit. The other bird is watching the bird eating the fruit. So very, very, very complex spiritual point. Sakshi Bhava, we say. This is a Sakshi Bhava, where I am now teaching you. Now I am watching myself teaching you. So there is one more, watching the doer. That is Sakshi Bhava. I mean, so that is Brahmanujintam. Point I'm trying, unless he is such an esoteric person, he cannot have meeting with himself. Okay, so let us not confuse. That is why they say, how to count quorum. One fellow is there, quorum. If that fellow is not. So, these two sections do not apply to an OPC which has only one director. Suppose they have 2 directors, 3 directors, 14 directors, 15 directors, it can have 1 member, 15 directors, it can have no problem. Then all these rules will apply. But only 1 director, chhod dijiye. One side, total out. Now, here comes the question asked by Janvi. Sir, for holding the board meeting, it should be financial year or calendar year? Now, your question is well taken. And the answer is in this slide. Means, have I used the word financial year in this slide? I have only taken from the act. Don't worry. Trust me, this is what is given in the act, only I have given here. Year, when it is used, sirf year, without any prefix, it is calendar year. When the word year, Y-E-A-R, not E-A-R, Khanne, year, okay, is used, then Sal, then year means calendar year. Here they have used the word year. In fact, in this section, in this part of the section 173, they very clearly say calendar year. They don't want you to have any doubt. Here they say only year. Therefore, we have a doubt whether it is calendar year or you never have a doubt. In the Companies Act 2013, if you find the word Y-E-A-R year, automatically calendar year. But if they want financial year, they will very specifically say financial year. They say financial year, then financial year begins on the 1st of April and ends on the 31st of March. Uniform financial year. Okay, so it is calendar year. Okay. I'm also giving you the clue. Sir, the gap of 120 days applicable for meeting and held within 1 financial year. No, calendar year. If the last board meeting held in January and the first board meeting next to no. As I already explained to you, it is calendar year. Okay, calendar year. I hope you are clear now. Once I give the clarification that the word year used here is calendar year, your question may not become relevant. Right? Chalo. Board of Directors of Section 8 company shall hold at least 1 meeting within every 6 calendar months. So they will hold 1 meeting, then 6 calendar months. Again, they use the word calendar month. Calendar month means January, February, March, April, December. These are all calendar months. These are figuring the, see, that's called the Gregorian calendar for your information. This 12-month calendar that we use now, beginning on the 1st of January, it's called Gregorian calendar. Okay. Whereas in India, we use Sakaira. Which is totally different. Nobody knows what is Sakaira now. In Tamil Nadu, we use Thiruvalluvar era. We are now in Thiruvalluvar year, I don't know, 20 something, I forget, 2040 or 2042, I forget. Because Thiruvalluvar was born 2000 years ago. No, because when I was 20 years old, they said he was born 2000 years ago. Now I'm 57 years old. So definitely it is more than that. Nah? Okay. So assuming that it is 2040 or so, it is all this. I'm thankful that you have understood clearly. If so, we should be able to answer this question. Adekar Industries Limited conducted board meetings during 2019 or 2022. Change the year, no problem for me. It doesn't matter. Make it more. Suppose I'm setting this as a question in your current paper, I will say 2022. 2019 on 5/3/2019, 1/7/2019, 31/10/2019, and an emergency board meeting on 15/11. See, 31/10 they held, again on 15/11 they are holding. Has the company complied with Section 173(1) of the Companies Act 2013? It has conducted 4 board meetings. But one more condition, they say, the intervening period between 2 board meetings, 2 consecutive board meetings, shall not be more than 120 days. So, 5/3 we held the first meeting on 5/3, the first meeting in the year, calendar year 19, and then the next was held on 1/7. So, in March, 26 days, plus 30 days in April, 31 days in May, 30 days in June. So, totaling 117, very much on 1/7, we are well within the 120-day limit. Now, the next meeting was held on 31/10. Now, 1/7, which means in July, 31 days. Out of that, 1/7 gone. So, from 2/7 onwards, 30 days in July, 30 days in July, 31 days in August, 30 days in September. Then, since the meeting was held on 31st October, I'm counting 30 days in October. When I total up, I'm getting, unfortunately, 121. So the gap, intervening period between two board meetings, that is 1/7 and 31/10, the intervening period is more than 120 days. 15/11, no problem, just 14 days, not a problem. Thus, it can be seen that though the company has conducted 4 board meetings in 2019, the gap between BM2 and BM3 is 121. That is greater than 120 days. Therefore, the company has not the gap means in between, therefore not including the meeting dates, not including the dates of the meeting. In between you have to count. That is why in July I'm taking 30, and in October I'm leaving out that one day, 30 days. Okay. Therefore, the company has not complied with section 173(1). I hope by this example you have also understood the mechanics of the provision. Now here is another company called Pulp Fiction Private Limited. Pulp Fiction, I don't know how many of you recognize the name, is a movie, famous movie by a very great director. My favorite director, not exactly my favorite, because my favorite would be Elia Kazan. Why, all of them are good. Spielberg, you name it, yeah. Nolan for some movies. All of them, Akira Kurosawa, Christian Petzold, all of them are great. But somehow I like Tarantino. And Tarantino, this movie Pulp Fiction is, for non-linear storytelling, one of the best movies. Okay, I'm sure you're all CA students, so you don't have time to do all these things. So if you get time later, after you clear your final, watch all the Tarantino movies. Okay, my son and I, we binge watched some of the Tarantino movies, including Once Upon a Time in Hollywood, and beautiful movies. So Pulp Fiction Private Limited, an online startup company, has held board meetings on 15/3/2019. It's a startup company, private company, startup, online startup. Pulp Fiction has held board meetings on 15/3/2019 and on 30/6/2019. 15/3/36. What is the rule for that? The gap should not be less than 90 days. Okay. Now, I wish, your generation, in the word OK has only one O and one K. I have seen so many people, double O, double K, triple K, double O, why? One O, one K, OK. Some people, even my wife does it when she's texting now. Okay, K. What okay, K? Yeah. Okay. Once okay is enough, no? Why okay, K? I'm sorry, Buddha hai na. So that's why I'm not able to appreciate your younger generation ka language. Okay. I'm trying to adapt. Okay, K. I don't know what it is. Okay. One okay is enough. Why two? And that two okay, K. Why not okay? I don't know. I'm sorry. This is the unfortunate words of a Buddha. Okay. So here is the problem. Yes, as rightly pointed out by Kaushiki ji, 15/3/2019, 36, both are in the same half. Private company shall be deemed to have complied with if it at least one board meeting in each half. It can be seen that though the gap between the two board meetings is not less than 90 days, the gap is more than 90 days, no problem. But so if you count the dates, in between dates, you will find 16th March to 31/5, you will find it's more than 90 days, not a problem. But both the meetings have been held in the first half, rightly pointed out by Kaushiki. Therefore, the company has not. We only wish, one day they had pushed it. If they had held it in July, they are safe. Unfortunately, they have violated. See, you might ask me, is it all very important? Yes, unfortunately, somebody was asking the last class, after I closed the class, somebody was asking the question, what is secretarial audit? I should have explained it. I'm very, very sorry. See, we have a financial audit, right? You are all studying a separate paper called Auditing. So what is the goal of a financial audit? Pure balance sheet audit under the Companies Act 2013. As an auditor appointed for auditing company, my goal is very, very simple. I am trying to ascertain that the company is maintaining accounts correctly and these accounts are closed and the TB is there, and that balance sheet and P&L are there, and that they truly and fairly represent the transactions which happened during the year. For that, I have many tools, etc. Vouching, verification, calling for information, explanations, blah, 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 third-party confirmation, direct audit, verification. So many things are there. Third, whatever. I use all that, and then finally I form an opinion. The balance sheet and profit and loss account, disclosure, true and fair view. That is all. So this is called financial audit, statutory audit. Like that, we have internal audit. The goals are different there. Like that, we have so many audits. Secretarial audit is an audit of the compliance with the law, especially the Companies Act. So the Companies Act 2013 has elaborate provisions now. For example, how many board meetings we held. So the secretarial auditor's job is to ensure that the board meetings were actually held, whether they have complied with this section and all. All this they'll be going through. In case they were, oh, you're asking, is it? No, you're right. No meeting in second half. Therefore, there is no meeting in second half. Therefore, the company has not complied with the section. If you are asking, the answer is no. And your conclusion is correct. The company has not complied with section 173(5). So as I was saying, the secretarial auditor will do all these things. Whether the notices are correctly sent, blah, blah. In case there was a buyback during the year, whether the buyback, there's a larger compliance. Then company secretary will have to be thorough in SEBI. In fact, not to again talk about my daughter again and again, but she was an authority in security laws. She used to teach security laws for the company secretaries. Security laws, which is SEBI. So SEBI guidelines and all she used to teach. So there, the company secretary will verify the SEBI guidelines and see whether this listed company has complied with that. That is why the secretarial audit is not applicable to all companies. Only for companies having certain above turnover, they have paid up capital, they have secretarial audit. In case company failed to conduct a meeting in time, what to do? Pay penalty and go, that's all. What to do? All your job to hold the meeting here. What, Baba? Every other day, Rotary Club is having meeting every week. If Rotary Club is having every week, Masonic Club is having every 3 months, every month, every 2 months. And other social clubs and others can have meeting. Why this company cannot have one meeting here? Just have to come together, meet and go. Okay. So the answer is, they will be, if in case they have not held it, then think. But in most cases, I will tell you the reality. At the end of the year, the company secretary will come for finalizing annual report and all that. At that time, he will ask, how many board meetings you held? Then they will say, what board meeting, get out. So at that time, this fellow will start writing minutes as if board meeting was held. He will find out from the directors on which day they were in the same location. And then he will select some dates. And then he will see what all transactions have happened. And then he will prepare board minutes as if the board meetings have actually been held. Okay, luckily, this need not be uploaded in any MCA website. No deadline is there. So the board minutes will be prepared by him. Then the chairman will come and sign everywhere. But this is what reality happens. So don't get angry with me if I give this answer. But otherwise, if you are very honest and you say, I have not held a board meeting, gone. If it is a listed company, it's not so easy. Because company secretary will be there, listing agreement is there. So any decision taken, if you are going to announce it, there should be a board meeting for it. Without that, you cannot announce it. So there it's a different. Listed company, totally different. Continuous monitoring. As I told you now, listed company hit by many, many provisions. Companies Act is only the least of the problems. You have SEBI guideline, you have a listing agreement, everything will come and hit you. That is why listed companies have more compliance requirement. That is why they need a separate company secretary in full time. And they need a secretarial department also who will have to take care of all these things. It's very complex. Okay. So, sorry, I gave the real history of what happens for 95% of the company, including some listed companies. Okay. Because not much activity, then at the end of the year, fellow will come and write all the minutes and go. For that, one lump sum contract will pay happy. Okay. Ratan Tata fell sick once. Ratan Tata ji fell sick. So immediately, Ratan Tata. So all the hospitals in, all the doctors, they were consulted. And all of them saw Ratan Tata and they prescribed medicines and they went off. And then the people asked, why you have called everybody? So they also should survive now. They should also earn and have a livelihood now, like that Tata said, Ratan ji said. Chalo. Then they had prescribed so many tests and all the tests were done. So Ratan Tata, they asked, why are you giving all the tests? Said, the diagnostic laboratory should also survive now. Then finally, they prescribed medicines. He said, go and buy all these medicines and come. I said, hey, why are you buying all this? So buy. Because all the pharmacists should survive now, like that. Ratan Tata, out of his generosity, he said. Finally, when all the medicines had come, Ratan Tata said, throw all of them in the garbage. Hey, why? Said, I have to survive now. Like that, Ratan Tata said. Like that, even the company secretary has to survive now. He has to have a job. So let us give him an opportunity. Okay. Now, participation of directors. So what is the logic behind considering calendar year of conducting board meeting instead of financial year? Seriously, I don't know the logic. Maybe because, I'll tell you that there is no logic. What I'm going to tell you, I can't bring it strictly under the heading logic. But I can give an explanation why it could have come like this. Because, remember, our law is directly borrowed from the English Companies Act. Now, in England, it is the financial year itself begins on 1st January. Okay, so they don't distinguish between calendar year and financial year. And our law for 1956 was direct from English law. The 48 law. There was a 48 law, which was English law, which became directly 56 law, with some small changes. Then they were amended in 60s again, 60, 61, it was amended. Okay. So right from the beginning, it was calendar year, which is why we had different financial years also you could have in those days. It was, I think only in the 2013 Act or maybe in the 99 Amendment, they included the uniform financial year, 1/4. At that time, they bought 1/4. And in India, when we became independent, our financial and fiscal year, we made it 1st April. God only knows why. There you'd ask me logic, 100% I don't know who selected 1st April, why. Maybe you have a better answer, I don't know. And it so happens the Companies Act 1956 was passed in Parliament on 1st April. 1st April is a very beautiful day to start the financial year. Na? Why? It's a good day, that's all I can tell. Because you think. So, my point here is, thank you, Namrata, for enjoying that Ratan Tata joke. Now, the point here is, so right from British period, it is calendar year. Therefore, maybe that surviving, they have not changed it to financial. One more thing, if you have it financial year, now it will be very confusing. It is better to have it calendar year. Okay. So, if you ask me which is better, I would say calendar year is better. One more thing, our enlightened Prime Minister is going to change the financial year from the current 1st April to, he is going to prepone it to 1st January. For it may happen anytime. It may happen this year, means 1st January 24 may be the new financial year, or 1st January 25, provided, we do the right thing for him. Whatever it is, he is going to do it. Why? Because all superpowers have financial year 1st January to 31/12. So the minute we change our financial year, we will become superpower. Therefore, we will change. It's going to happen. I'm not joking. Suddenly, you will find the news hitting. Financial year changed from 1st April to 1st January. Everybody means 9 months, 1 year will come. Then we'll have one more year beginning. That will be 12-month year. Yeah, everybody will be confused. Income tax will be confused. GST will be confused. Everybody confused. Chartered accountants will be having conference after conference discussing what is to be done. Clients will be confused. Everything will be superbly confused for another 9 months, 1 year. Everybody will be confused. That is. But we will make money out of that confusion. Na? All of us should be happy, because with that, more jobs will come, more reconciliation work will come, double accounting will come, double audits, because we will be auditing because some laws will not change. Income Tax Act will continue with April. Companies Act will be amended. All sorts of funny things will happen. Okay, I don't know. Or maybe Companies Act will not be amended. Income tax will be amended. Income tax will become 1/1 to 31/12. Wow. Yeah, I'm really looking forward to those interesting times. Okay, when our enlightened Prime Minister decides to change the financial year from 1st April to 1st January. It will be a wonderful experience in learning, unlearning, relearning, totally going mad. Seriously, I'm not joking. It's going to happen. It was on the cards earlier, but then they shelved it. Don't worry, it will be taken out of the shelf. When the time is right, it will come. Okay, now, directors can, this may not happen tomorrow, but it is going to happen 100%. And after it happens, we will become superpower. That's all. Straight away superpower. Right. So now, participation of directors, meaning you might have seen in meetings of members that a member may attend a meeting in person or through proxy. Okay, voting may be in person or through proxy or postal ballot. Okay, or postal ballot or virtual mode, online meeting. Okay, online voting. Similarly, directors may participate in a board meeting either in person, meaning attend in person, okay, or through video conferencing, meaning he can log in through Skype or Zoom or whatever you're using, Microsoft Teams or Google Meetings or whatever, Google Meet. There are about Adjournment, WebEx, Cisco WebEx, BlueJeans, so many are there. To my knowledge, I'm giving. Maybe some more are there. God only knows. I'm sure you know many more meetings applications, meeting applications and all. Okay. So the point is, one of my close colleagues, professional colleague, CA, his son is a young genius. So he designed another meeting app, which was to have been acquired at a huge valuation, but he has to pursue his studies abroad, so he's gone. Okay, so the point I'm making is any video conferencing mode you can have, or other audio-visual means, meaning webinar, whatever. So what is an other audio-visual means? It should be capable of recording and recognizing the participation of the directors and of recording and storing the proceedings of such meetings along with the date and time. Okay, now, at the time when this law was discussed in 2013, pandemic had not come. So they are not distinguishing between video conferencing and other audio-visual means. Today, they are all one and the same. Whether you call it a Zoom is a video conference or it is other audio-visual, it is all the same. So basically, it should be capable of recording and recognizing the participation of directors. So we should be able to know, by seeing the record, we should know who are the directors who attended and what is it that was discussed. So that should become a permanent record for us. And it should be capable of being. Reason later on in the course of this topic, I will tell you that proceedings of the board meetings are evidence in a court of law. Conclusive evidence. If it is written in the minutes and signed by the chairman, nobody can question it. Similarly, these audio-visual records are all minutes are evidence. So where there is a quorum in a meeting through physical presence of directors. So understand, in person, through video audio. So how to count quorum? So a video conference meeting, can happen both on video conference and in physical. So there should be a quorum in a meeting through physical presence. Where there is a quorum in a meeting through physical presence, any other director may participate through video conferencing or other audio-visual means. So where a meeting is held in physical mode, where it is held in physical mode, there are certain matters which cannot be done through video conferencing. So where it is done in physical mode, then the minimum quorum, the minimum number of persons, quorum, should be present in physical presence. If that quorum is present in physical presence, then other directors may participate through video conferencing or other audiovisual means in such meeting on any matter which cannot be dealt with in video conferencing. See, there are certain matters that they feel you should not do through video conferencing. You should do it in physical form. In such cases also, if the quorum is present in physical form, the other directors can attend through video or audiovisual means. So in respect of matters which cannot be done through video conferencing, right? Now, certain matters they feel cannot be done through video conferencing. Other than this, anything can be done through video conferencing. So the following matters shall not be dealt with in any meeting held through video conferencing or other audiovisual means. 1. The approval of annual financial statements. This needs deliberation and discussion. Cannot be done by video conferencing. The approval of the board's report. physical. So these matters cannot be done by video or audio visual. Therefore, it has to be done only by physical form. Okay, so try to remember these items. Because MCQ easy question. Which of the following matters is, which of the following is a matter which can be done through video conferencing? They might give you 3 of this and 1 item which is not in this list. You have to select that. Okay. So approval of board's report cannot be done through video conferencing. Approval of prospectus cannot be done through video conferencing. Audit committee meetings for consideration of financial statement, including consolidated financial statement, to be approved by the board. So before it is approved by the board, the audit committee has to consider and discuss. That meeting cannot be done by video conferencing. It has to be. Similarly, the approval of the matter relating to amalgamation, merger, demerger, acquisition, and takeover. So approval of matter relating to amalgamation, merger, demerger, acquisition, and takeover. So this can be done. These 5 matters cannot be done through video conferencing. But unfortunately, because of pandemic, it became very impossible for us to meet in person. So up to June 2021, these matters could also be done through video conference. See, other than these matters, you can do any matter through video conference. But these matters cannot be done through video conference. But till 30th June 2021, unfortunately, because of COVID-19 or whatever you called it, these matters also could be done through video. But today, you cannot do it. This has to be done only physical. Okay, try to remember these 5 matters. Now, we are going into notice. Notice means knowledge. So, we have to give knowledge of the meeting. Any director who is entitled to attend should be given notice. Now, earlier, these rules were not very strict. There was no rule that it should be given within such and such a notice period. Now they are very clear. The section says, board meeting shall be called by giving not less than 7 days notice. So you should give at least 7 days notice, meaning 7 days should be there between the date of service of notice and the date of meeting. If it is sent by email, don't count the date of received mail. Then next day start counting 1, 2, 3, 4, 5, 6, 7. The 8th day only you can hold. This is how we should understand. Not less than 7. In writing, see, writing includes email. Email is writing. Don't worry. Okay. Email is a written form. It is preservable. So in writing to every director at his registered address with the company. Such notice shall be sent by hand delivery or by post or by electronic means. So email is also allowed. Ideally, what we do, we prepare it in writing, signed by director, and then it will be scanned, then attached to the email, and the main email, the company secretary will send, saying, please find out. Even the company secretary can sign the board notice, or 2 directors can sign. Now, whatever it is, it should be sent in writing, either by post or by hand delivery or by electronic means. See, remember one more thing. Board meeting is a very, very broad-based topic because, see, there could be a large listed company like Adekar Industries Limited, which has 15 directors. Or there could be a small company, husband and wife thing where the 2 directors, husband and wife. So, but the law is applicable to all of them. That is why something is there, compliance is there. So this husband, in fact, sometimes my father, that client will come and say, sir, we are company, private limited, sir, we should have board meeting. My father will ask him, look here, what do you mean board meeting? You and your wife are directors. Every day in the dining table, you are having board meeting. Yeah. You tell me which day I will take it as board meeting. That's all. You are discussing the company only. You don't have time for talking about anything else. Even your own children, you don't talk about them. You don't bother about them. Both of you are only concerned with earning money, company. So every day dining table is a board meeting. Driving in the car to the office, board meeting. So what is the big? So idea of a board meeting is the affairs of the company are being discussed and long-term decisions are being taken. That's all. Okay. I mean, I'm being very casual here, but so any day board meeting, what is there like that? He used to say. Okay. So a board meeting may be called at shorter notice sometimes. Why? Because that's why I said board is a very, very dynamic thing. running the day-to-day affairs of the company. So there, once in a while, you can have a board meeting at shorter notice to transact urgent business. And if you want to hold it at a shorter notice, at least one independent director, if any, shall be present at that meeting. Suppose the company does not have independent director, no need. In case of absence of independent directors from such a meeting, please understand, all companies need not have independent director. We saw that. Only listed companies and certain other companies, public companies, need to have independent director. So this will be applicable only for those companies. Where there are no independent directors, you can call a board meeting at shorter notice to transact urgent business. Meaning something has to be, for example, an important contract needs to be approved, or we have to buy something, do something, you have to hold a meeting, then we'll give 48 hours notice and call. But that if the independent directors are not attending, then the decisions taken at such meeting shall be circulated to all the directors and shall be final only on ratification thereof by at least one independent director, if any. So even if one independent director is not present, if the company has independent directors, then all directors, okay, should be given copy of that decision, and at least one independent director should ratify, if any. Okay. Idea is to see this type of a provision is applicable more for listed companies. If it is a mom and pop type where, husband and wife, no need. So long as you justify that you had a shorter notice to transact urgent business, that's all. Every officer of the company whose duty it is to give notice under this section and who fails to do so shall be liable to a penalty of INR 25,000. So this is a penalty in case notice is not given. There is no particular form of notice. There is no prescription. Generally, notice is hereby given that a meeting of the Board of Directors of Dubakur Limited will be held on 4th May 2023 at the registered office of the company or at Hotel Aruna International, whatever. Okay, to transact the following business, 1, 2, 3, 4. Signed by order of the board, signed company secretary, or signed Mr. X Director, place Chennai, date so and so. Letterhead of the company on top. Registered office address, blah, blah, blah. Send it. I mean, no format. If you want, you can create your own format. If the articles provide that there will be a meeting on a particular day of every month, then there will be no need to serve notice. See, normally we don't try that stunt nowadays. We don't put the board shall meet every month on the second Tuesday of every month. Normally, no. But in case the articles have such a provision, then it is as if deemed notice has been given. Means if any gentleman or lady becomes a director of the company, they are deemed to have read the articles. The director cannot plead ignorance of the articles and memorandum. Remember, constructive notice applies to third parties. 100% director of a company cannot say, I am not aware of the articles like that. You are deemed to have read the articles, Baba. You are the director. So you know that there is a meeting on the second Tuesday of every month. I will come. In case there is no meeting, you sue me. Or if there is no meeting, I'll give you notice that there is no meeting and it's going to be held on such a day. But emergency is accepted. We will give you notice. Otherwise, the next meeting will be on the second Tuesday of the next month. Come. So this is how it should be. In fact, in this case, Arunachalam Shettiar versus Kalishwarar Mills, one director said, you have not given me notice to the company secretary. Company secretary sent a copy of the articles to him. The company secretary sent a copy of the articles to him. It's clearly it says there, come like that. Okay. This was decided in 1957 under the immediately after the law was amended in the new law came. Okay, in the Madras High Court. Very good. So we are going to get into a topic called quorum. Okay. Quorum is the minimum number of persons required to constitute a valid meeting. You already know the quorum for a company meeting. Okay. It is based on the number of persons physically present. Then out of that, so many physically present. See, Proxy cannot be counted for quorum in a general meeting. Here in directors meeting, there is no proxy. Alternate director is not a proxy. Alternate director is a director appointed by the board, attending the board meeting. He will be counted for quorum. I'm repeating. Alternate director is a director attending the board meeting. It so happens he's been appointed in the place of the original director who is leaving India for more than 3 months. But he is a director and he will be counted in his own right for quorum. And he is having a vote. He can vote by show of hands. So don't confuse the alternate director with the proxy rule. Proxy alage, alternate director alage. Okay. Now, directors are of two types. Interested director, opposite of interested, the word interested in English, Angrezi mein interested hai na, it has two meanings. Opposite, antonym, there are two. One is uninterested. For example, many times when a lecture is given by me in a very boring way, some students will become uninterested. Boring, yeah, like that. That is uninterested. Whereas another opposite is there, antonym is there for interested, which is disinterested. Meaning what? Not financially interested. Disinterested means not financially interested. Disinterested director means a director who does not have any financial gain or loss, directly or indirectly, whether by himself or through relatives, in the matter to be transacted or in the matter to be discussed. So interested director means what? A person who has interest, whether directly or indirectly, in the matter to be discussed. Maybe his relative is being appointed as the director, or relative is being appointed in an office or place of profit, or his relative or a firm in which he or his relative is a partner. These are all related parties. Some related party is getting a contract from the company, where the contract is to be entered into with a related party. Then that director who is a relative, now he is an interested director. So in any way, if the director is having a financial or pecuniary interest in the transaction or matter to be discussed, he is called interested director. If he is not, then that is called disinterested director. Okay, sir? So interested director, disinterested director. Now, quorum should be counted only with the disinterested directors. Interested directors not to be counted for quorum. Interested directors not to be counted for quorum. This will be taken for each item separately. Meaning when the board meeting starts, we will see whether quorum is present. Then we'll take up agenda number 1, some simple matter, everybody can participate. Agenda number 2, normal matter, everybody can participate. Agenda number 3, appointment of director Mr. D's relative as sole selling agent. D is interested. So D should not be counted. Then we have to count quorum and see whether we have minimum. Out of the remaining disinterested buggers, we have to see whether we have a quorum. What is that quorum? 1/3 of total strength or 2, whichever is higher. Remember, very important, 1/3 of total strength or 2, whichever is higher. Okay. Can we say disinterested equal to independent director? No. Because that is a clear provision there. I have taught that to you. Right, sir? Right, madam? There are so many things for independence. So even a non-independent director can be disinterested. So long as in that matter, he is not having any financial interest. So do not confuse. For the purpose of clarity, do not get confused. Independent director, alage. Disinterested, interested, alage. Here, simply that matter. Do you have any connection? That is all we are asking. He need not be totally independent. There may be other matters where they are interested. In this matter, he is not interested. That's all. So, disinterested is different from independent. Okay, so don't confuse. No, thank you for raising this question. Don't confuse them. Disinterested only for transaction. Whereas independence, complete. Nothing. You cannot have anything to do with this company. Nothing, ever. Okay, so, see, for example, MD's son may be appointed as whole-time director. Vijay Adekar's son Vikram is appointed. At that time, Vikram and his wife Vimala will be interested. Only for that, they will become interested director. So they are not independent directors, but still they will become interested. In other matter, they may not be interested. They have nothing to do, then disinterested. Okay. So quorum, they can be included for quorum. So interested director cannot be included for quorum, right? So what is the quorum for a board meeting? 1/3 of the total number of directors, means 1/3 of total strength, or 2, whichever is higher. Suppose when I'm dividing by 3, every time I may not get a multiple of 3. I could get 0.33 or 0.66. Any fraction shall be rounded off as 1. So whether 0.33 or 0.66, 1. Total strength is equal to total number of directors minus vacancies. So suppose the total number of directors is 15, but only 12 directors are there. Then total strength is 15 minus vacancy 3, 12. Okay. Now, interested director not to be counted for quorum. Agreed. But there is one exception. If the number of interested directors exceeds or is equal to 2/3 of the total strength, if the number of interested director exceeds, means more than or equal to 2/3 of total strength, then the remaining directors, being not less than 2, shall form quorum. The remaining directors, there should be at least 2 remaining disinterested fellows, even though they may not be 1/3 or this total strength. Even though they may not be 1/3 of the total strength, is still, if you have 2 directors and the number of interested directors in the total strength is equal to or more than 2/3 of total strength, then the remaining directors, being not less than 2, shall form quorum. This is a little interesting topic, but it needs again, a numerical example. So let us see. Before that, how to calculate? Quickly we have seen. Total number of directors, 2, 3, then 1/3 is 1, rounded off to 2. You can't have 1, 2, 1/3 or 2, whichever is higher. Here 2 is higher, you have to take 2. 4, 1.33 becomes 2. 5, 1.66 becomes 2. 6, 2, 2. 7, 2.333. 8, 2.663. 9, 3, 3. I mean, just for your information. Now, who is an interested director? This is not contained in this project. You have to go to 184.2, where any contract or arrangement is proposed, or any existing contract or arrangement or proposed contract or arrangement entered into or to be entered into. If any director is interested, that is every director of a company who is in any way, whether directly or indirectly concerned in or interested in a contract or arrangement or proposed contract or arrangement with a body corporate in which such director or such director in association with any other director holds more than 2% shareholding. So if in that body corporate, any director of this company or in this director along with other directors together aggregately hold more than 2% shareholding, then that body is related, and for 184.2, and this guy becomes interested director. Okay. Also is a promoter, manager, chief executive officer of that body corporate, or with a firm or other entity in which such director is a partner or owner or member, as the case may be. So we have A Limited. There is a firm called B. Now a director of A Limited is a partner in B. Then that firm, if you are going to enter into any contract, B will become interested. Every director who is in any way, whether directly or indirectly concerned or interested in, with a firm or other entity in which such director is a partner, owner, or member, as the case may be. Other entity means it could be LLP, whatever. So they use the word. Body corporate in which such director or in such director in association with either director holds more than 2% shareholding, or is a promoter, manager, or CEO of that body corporate. So here we have a question. I have taken this directly from 184.2. Again, when I come to related parties, etc., we will talk again about 184.2. Okay. So AB Limited is proposing to enter into a contract with PQR Limited. Mr. A director of AB Limited, is holding 1% of the paid-up share capital in PQR Limited. Mrs. A is a director of PQR Limited and is holding 25% of the paid-up share capital. Is Mr. A an interested director? Be careful. If you go strictly by 184.2, you will notice that 184.2 does not talk about director. So A is a director of AB Limited, he is holding 1%. Mrs. A is a director. A is not a common director here. Mrs. A is a director and is holding 25% of the paid up share capital. So no director is holding more than 2% because A is the only director. He is holding only 1%. So you cannot, can you say 184(2) does not apply that A is not an interested director? No. Why? Because they say every director of a company who is in any way, whether directly or indirectly concerned or interested. Here, he is concerned or interested as his wife is a director. Indirectly concerned. His wife, relative is a director. Therefore, indirectly concerned. Are you able to understand? Therefore, my conclusion, humble conclusion is A is an interested director. Because if there is going to be a contract between AB Limited and PQR, A is holding 1%, no problem. But Mrs. A is a director now in PQR. Therefore, in this contract, approval of this contract, A is interested. Because it's indirect interest. Because his wife is a director of PQR Limited. Okay. I hope this point is clear. So this is how we calculate interest. So don't confuse with independent director. We have to take each situation and we have to see what is the other party. We should see whether any of these conditions are satisfied. If so, then whether there is directly or indirectly concerned or interested. Okay, I have given you one view. Now, Sriram or somebody could hold another view. They could say, and sir, only if any director of this company is holding more than 1% in the paid up share capital, more than 2%, then only I have to consider now. Otherwise, 184(2) itself is not invoked, sir. Therefore, A is not an interested director. It's a very, very puristic way of approaching, strict interpretation of the section. Whereas what I have given is a reasonable interpretation, going by the intention of the legislature. The intention is that A should not be involved in a discussion where his own wife is a director in that company. But unfortunately, the words of section 184 are so narrowly worded, it appears that if no director of this company is holding more than 2% there, then 184(2) itself will not be invoked. Only if 184(2) is invoked, you have to see whether director is interested or disinterested and all. Here is a situation where it is not coming at all. Therefore, you could argue that A is a director of PQR Limited. Mrs. A is there. But no director of AB Limited is holding more than 2%. Only A is holding that to 1%. Therefore, A is not interested. Now, here is a situation where, for the same facts, we are able to conclude with two answers. The answer given by me first time based on reasonable conclusion, whereas the answer given by me in the second round is based on strict interpretation of 184(2). Now, which one would you prefer? A interested or A is not interested? I hope this is clear. My explanation is clear. Again, we will revisit the same situation when I come to 184(2) again. Don't worry. This is not the last time we are going to deal with this. We are going to see related party definition again. That will be slightly different from this. All sorts of confusion. 188 alage, 184 alage. So don't compare between sections. Deal with each section separately. 184, 184, 188, 188. Okay, 173, 173. Kaushiki says not interested. Hey, I'm waiting for Sriram's response. And maybe Janvi also, Namrata ji. And if you had a lot of people who used to attend. Nowadays, nobody is answering here. See, I have written a book in those days under the old law. The equivalent of 184 in those days was 299. In 1956, section of the 1956 was 299. And 299 I have clearly interpreted in my book. 299 has a similar wording. And there I have very clearly interpreted. If no director of one company is holding more than 1% here, more than 2, now they said 2%, more than 2% here, then section does not apply. Stayed away. If section does not apply, then forget it. When we come to 184, I will explain in more detail. Right now, what I want you to understand is, a director will become interested if he is covered by section 184. Only then he'll be interested. Interested director means a director interested according to section 184. That is why we are dealing with 184 here. Okay. We will do more in-depth study when we come to 184. Very interesting sections. Now, Kaushiki ji, you are saying the director is not interested or that you are not interested in the topic. English is a treacherous language, dangerous language. Participation of the directors by video conferencing or by other audiovisual means shall also be counted for the purpose of quorum. See, suppose the meeting is to be held by video conferencing, then participation by video conferencing will be counted for quorum. But if it is to be held by physical meeting, then remember, at the physical meeting, I should have a minimum number. Quorum should be there. And the balance can come by video. But physical meeting, there should be a quorum if it is to be transacted only at physical meeting. But suppose video conferencing is allowed, then we can have both video and physical, no problem. And video wallas also can be counted, provided the matter is one which can be transacted by video conferencing. Then even the video conferencing fellows will be counted. So suppose 5 directors are attending, 3 are sitting here in Mumbai or wherever you are. The other 2 are participating from, say, Vadodara, and the other guy is participating from Ludhiana. No problem. Those 2 guys also will be counted for quorum. Okay. I cannot understand the term such director in association with any other director. I'll explain. See, in our example, A is holding 1%. A is a director of AB Limited. So, every director of a company who is in any way, whether directly or indirectly concerned or interested. So, A is the such director. He is interested now because his wife is there. If that such director, in our case A, either by himself or in association with other directors. Suppose the company has 4 directors. Along with A, you have X, Y, Z. A, X, Y, Z. Suppose A and X together, A is holding 1%, X is holding 3%. Together, if you take A and X together, they will be holding more than 2% now. So, such director, meaning A, who is having direct or indirect interest, whether by himself or in association with any other director. So, either such director or such director in association with any other director holds more than 2%. In our example, no other director of AB Limited is holding shareholding in PQR Limited. No director of AB Limited is holding shares in PQR. Therefore, we said 184 will not apply. Suppose AB Limited has 3 other directors, X, Y, and Z, and A is holding 1%, X is holding 3%. Then such director A, in association with any other director X, holds more than 2% now. Am I correct? 4% is more than 2% now. Then 184.2 will apply. And A is having indirect interest because Mrs. A is a director. Then he cannot participate. But in our example, only A is there and only he is holding 1%, which is less than 2%. Therefore, 184 will not apply. That is why Kaushiki says he is not interested, which is correct. Sriram, have you understood? Is this clear? Because if you become clear now, again when you come to 184, it will become easy for you. Okay? And one more thing, if you find the sections are a little difficult to understand, believe me, MCA has taken enough efforts to ensure that the sections are unnecessarily complicated. I'm sorry to say this. Earlier law was very, very simple. And the English was elegant and very grammatical. So many of these sections are ungrammatical. And because they are ungrammatical, the syntax is wrong, or the singular plural connection is not there, or negatives are wrongly used, we find that there's more confusion. But in this case, there is no confusion. This is how we have to understand it. It is clearly worded. In case the word directly or indirectly used in section, does it not mean that law itself is including case? That is why wife is not holding shares. 25% of the bill. Correct. Okay, that is why initially I gave you that one explanation. Do you remember? I supported your view first. That is called reasonable construction or logical, not even logical, reasonable. We have to go into that is called construction, not interpretation, construction. where we are trying to find out what is the intention of the legislature. But you studied the interpretation of statutes in your intermediate. And what is the cardinal rule of interpretation? What is the cardinal rule of interpretation? Where the words of the statute are clear and unambiguous, you cannot impute some, shall we say, assumed interpretation. So I'm going by strict interpretation, not interested. But if you go by this, your type of, the word indirectly, absolutely the word indirectly is used. But they are saying a contract, arrangement or proposed entered into or to be entered into with a body corporate in which such director, meaning a director who is directly and indirectly interested, is holding more than 2%. Only then 184.2 will become applicable. Otherwise, 184.2 will not apply. If it is not applicable, then not interested. That is how we have to understand. Okay. No. Mrs. A is not a director of AB Limited. You should look at directors of AB Limited. That's why I gave you example of X. See, A, X, Y, Z are directors of AB Limited. Directors of AB Limited. Mrs. A is not a director of AB Limited. Sriram, your understanding is wrong. Please. No. And your conclusion is also wrong. Since no director of AB Limited is holding more than 2%, A is not interested is the correct answer. A is not interested is the correct answer. Okay. So I hope you are able to understand this, Baba. Please don't mistake me. If you kindly confirm that you have understood my clarification, because if it stands here, then you have got a wrong handle. Mrs. A's holding, shareholding is not relevant for 184.2. We should only take directors of AB Limited. See, think A is holding in AB. A is a director of AB. Okay. He is not a director of PQR. Mrs. A is a director of PQR. She is holding 25% of the paid up share capital in PQR. Please understand. A is holding 1% of PQR. Mrs. A is holding 25. That is not problem because Mrs. A is not a director in AB. A director of another director of AB should be there. He should hold percentage. Together, that should be more than 2%. Please confirm that you have understood what I'm saying because I explained so much. You have still not understood the point. I gave you example. I said A, X, Y, Z. That X, Y, Z are directors of AB Limited. Okay. Whereas Mrs. A is not a director of AB Limited. So don't club these two. Mrs. A is a director holding 25%, meaning A is indirectly interested. But even if he is indirectly interested, 184.2 will be invoked only if any director of this company is holding, whether singly or together with other directors, more than 2%. In our example, that condition is not satisfied. Therefore, even though A is indirectly interested through his wife, 184.2 will not apply. This is, I know it sounds atrocious, it sounds idiotic, but this is how I have to interpret this section. But if Ms. Janvi still feels, no, sir, according to his interest, play it safe. Boss, nobody can prevent you from complying with the section if you want to be safe. Are you able to understand? Even if you feel it is not applicable, but you still comply with it, nothing wrong. You can go above the law. It is only when you go below that there is a problem. But the way I have interpreted, that is how the law is to be read. Okay. If Mrs. A does not hold shares, but CEO of the, now you have got a point. If she is, see, that is why you see, they are not used the word director here. They are saying promoter, manager, CEO. So now you have got a point, Viraj. Mrs. A does not hold, she can hold shares. Why do you go there? Her holding shares has nothing to do with this situation. She can hold, she need not hold. Don't worry about that. But the point is, if she is the CEO of that body corporate, then absolutely 184 will become applicable, A will be interested. Now you are right. Viraj is correct. Provided she is the chief executive officer of that company. You are right. A can be, like A shall be, A is an interested director. Okay, good. Boss, I tell you, this is a very interesting topic. Also complicated. Okay, your approach should be razor sharp. From now on, in this topic that I'm going to teach you for this 3 sessions, including today, your awareness of this topic should be razor sharp, razor thin understanding. You can't have blunt-edged thinking. If you only razor, you got asidhara. It should be able to cut a single strand of hair. It should cut. That sharp, if you are not, then you will understand it better. But if you are blunt, you cannot. Are you able to understand? Okay. And I'm very happy if we have people like Sriram, Viraj Desai, Kaushiki, Janvi. Of course, I'm not mentioning many of you. Purnima, I don't know whether she is here. All of you are razor sharp intelligences. Don't worry. But come with me. Okay. And I will make you sharper. I'm a diamond cutting instrument. I will cut you further and I will make you sharper. It will be painful, no doubt. Being cut by a diamond will be painful for you. Sometimes you'll feel very irritated, like Jarna is feeling, Agarwal is feeling angry with me. You will feel angry with me. But that pain, you have to bear it. Because to become sharp instruments, no, we have undergone that pain from our teachers. Our teachers were abrasive. They were abrasive tools. They kept scratching us and hurting us. But in that process, they made us sharper and sharper. And so that with that sharpness, when we enter the exam, we got all India rank. We got 80, 70, 60. But if they had made us agreed with whatever we told, yes, Viraj, you are right. Yes, Sriram, you are right. Then we would not have become sharp. You will be blunt. If you want to become sharp, allow me to cut you. I'll make you sharp. Good, Viraj. That was a good one. And Sriram, I hope you have understood. Thank you. Thank you for putting that. You understood. Don't worry. We'll go aram say this topic. Even if it takes a little more time, it's okay. Because definite one question from this topic. One question, 100% sure from this chapter. So concentrate on this chapter. Okay. We've seen this. Number of directors falling below the quorum. See, even so long as the number of directors is reduced below the quorum fixed by the Act, the continuing directors may act for the purpose of increasing the number of directors to that fixed for quorum, or of summoning a general meeting of the company, and for no other purpose. For example, I told you one example now. Unfortunately, I'll tell you one story. Mrs. A and Mrs. B, both are directors, only directors of the company. Mrs. B dies. I'm sorry, Mrs. A and Mr. A and Mrs. A. Mr. A and Mrs. A, loving couple, running a company, beautiful. Mrs. A dies. Now we have to comfort Mr. A. Don't worry. Jatasya dhruvam mrityu, dhruvam janma mritasya cha. That is part of life. Don't worry about asocha, nanvasochastvam, pratnyavadan shabhavshte, gatasu, nagatasu cha, nanu sochanti panditaha. Don't cry about your wife's death. But that is philosophical advice. A wants legal advice. So you understand, A has not come to chartered accountant for philosophical advice. He'll go to his Guruji for philosophical advice, Bhagavad Gita and all. He has come to... Okay, thank you. That was a good one. But yes, absolutely. Ulitangum silai. You have to withstand the chisel and the mallet. Then you will become perfect ashlers. Everybody, all of us are rough ashlers. We are stones that are incomplete. Even I am a rough ashler. I am continuously chiseling myself. I am putting the chisel on me and hitting myself with the mallet. And the pain is unbearable, but I am making myself, day by day, I am making myself more and more perfect. Okay, so it's that approach I am applying to myself first. And only after withstanding that pain, I am inflicting a little bit of pain on my students and my employees. Good. Yeah, absolutely correct, Sriram. God's Vigraha will come out only if the stone bears the pain. Of course. Good. Excellent. Yeah. Instead of saying God's Vigraha, maybe we can say a sculpture will come into existence. Beautiful sculpture comes in only when it withstands the pain. Absolutely correct. Okay, coming back to our Mr. A and Mrs. A. This Mr. A is bereaved man. He is coming to us. First, we can comfort him for some time. Then he is saying, okay, sir, that is there. She has gone. That I will manage. Sir. Now tell me what to do. Only one director. The number of directors is reduced below the quorum fixed by the Act for a board meeting. What can I do? Then you advise him, don't worry, under 174, even if it is reduced below, you can still act for the purpose of increasing the number of directors. Sir, what do you mean? Now he started thinking, Baba, your wife has gone, so what? You have one more. No. You have one more director. Okay. Oh, yeah. Sir, can I apply? I can appoint one additional director, sir? Yes. For the purpose of increasing the number, you can. Oh, really, sir? I didn't know this. Yesterday, when I went to the bar, I met one lady, nice lady. I will make her my director. Boss, that is your problem. You can increase the number of directors to that fixed for the quorum. Or, suppose it is not possible, because that person also is a relative, then you will become interested. Therefore, don't worry. all the shareholders of the company are there. Your wife now, your 3 children are also the shareholders now. Your other uncle, auntie, everybody is there. Now call everybody, have a general meeting, appoint one director for the purpose of filling up that vacancy. But for that purpose, you can call a general meeting now. For that, you can do it. Are you able to understand? Summoning the general meeting, you can do. So only for that purpose, you can. Okay. Hey, sometimes for sake of humor and the thing, I will tell certain things. Don't get serious and angry with me. Okay. It happens like that. The wife dies means immediately for how long? 13 days. Mayana Vairagyam. After that, he will think, aunt is there, she has gone. My life is still there. Let me live. So he'll come to, sometimes they'll come to chartered accountant for that. Meaning they will come with some sort of legal problem. But finally, he'll be wanting psychological advice. That is why I did MSc in psychology. So when they come and sit before me, I will listen to them fully. Then I will empathize with them. Then finally, I will say, you marry again, man. Live your life. Sir, can I do that, sir? What will my wife think, sir? She is in heaven blessing you, ma. You go get married. Thank you very much, sir. Because when the auditor is told that, now he feels, even auditor is told I can get married. Let me go and get married. Again, he will start his life. See, this is the role many of us practicing chartered accountants, we play for our clients. Going beyond financial advisor, we become their friend, philosopher, and guide. It happens. It happens. They come to us, family disputes. You might have seen, if you're doing your articles with mid-sized firm like mine, where many family businesses are there, you'll find this happens regularly, especially in Tamil Nadu, Andhra Pradesh, Karnataka. This is frequent. I don't know about Maharashtra and Punjab, but here it happens. Southern districts, southern states, auditors are complete. Everything for the client. We are there for them. Okay, like that. Now, quorum. In case of Section 8 company, the quorum shall be 8 members or 25% of its total strength, whichever is less. The quorum for the meeting of a company, not for board meeting. Okay. Now, according to proviso to Section 173(5), the provisions of Section 174 relating to quorum are not applicable to one-person company, which has only one director. We already saw this. Okay. Moving on. Adjournment for want of quorum. For general meeting, we might have discussed adjournment for want of quorum. Am I correct? Where a meeting of the board could not be held for want of quorum. General meeting, when you call and the quorum is not present within half an hour from the time appointed for the meeting shall stand adjourned. To the same time, same place, or at a day fixed by the board. Time fixed by the board. If at the adjourned meeting also the quorum is not present, then the members present shall form a valid quorum. This is for quorum, right, of general meeting. Now, for board meeting, you are calling the board meeting at 3 p.m. on Monday, Tuesday, the 2nd of May, 2023. We come, quorum is 3, 2 directors are there waiting, 3rd man doesn't come, quorum is not present. Then, unless the articles of the company otherwise provide, suppose the article says, in case quorum is not present, meeting will be dissolved, then meeting will be dissolved. If the articles do not provide otherwise, then the meeting shall automatically stand adjourned to the same time, same day, at the place in the next week, or if that day is a national holiday, till the next succeeding day, which is not a national holiday, at the same time and place. That's all. Okay. Thereafter, they are not giving any conclusion. The idea is, if you still want to have a meeting, you can do it at the adjourned meeting. But there again, the quorum should be present. If at the adjourned meeting also, if you ask me what happens if the quorum is not present, meeting will be dissolved. That's all. Okay. If you are unable to hold the meeting for want of quorum like this, what to do? That is where you appoint additional directors who will come for the meeting, or you do something which your call. What can we do? If you don't hold board meeting, punishment, penalty. That's all. Now we come to an important, interesting concept, numerical. You have to apply what you learned now in this problem. The board of directors of ABC Limited comprises of A, B, C, D, E, F, G, H, and I. 9 fellows. Of these, B, C, E, G, and H are interested in a particular transaction. So totally A, B, C, D, E, F, G, H, I, 9. Out of that, B, C, E, G, and H are interested. So cannot be counted for quorum. At the board meeting, where this matter comes up for discussion, where B, C, E, G, and H are interested, now that matter, that transaction is coming up for discussion at the board meeting. At that meeting, A, B, C, and D are attending. Only A, B, C, and D are there. Examine whether there is a valid quorum. Examine whether there is a valid quorum. Actually, I'm giving the answer in the same screen, so you might be able to see it. But anyway, so what is the total strength? 9. What is the quorum required? 1/3 of 9, 3. Or 2, whichever is higher. The quorum is 3. Now, B and C are interested, remaining A and D, whereas you need 3. Therefore, A and D cannot constitute a valid quorum. So, quorum is not present. Meeting cannot, you cannot transact this matter. Why? Because B and C are interested, A and D are not interested, but only 2. I need minimum 3 disinterested directors. So, the A and D alone do not constitute a valid quorum capable of transacting this business. You can transact other business, which is in which B and C are not interested. But this matter, you cannot. You have to maybe postpone it. Can be counted for quorum. Who can be counted for quorum? Madam, if you put sentences like this, what will a poor man like me do? Getting confused totally. Can be counted for quorum. Who can be counted for quorum? What for purpose? A and D can be counted for quorum, but they are only 2, whereas I need 3, 1/3 of 9 now. So a frequent mistake is to exclude interested directors while calculating total strength. Don't do that. For calculating quorum, all directors should be considered, including interested directors. For calculating quorum, all directors to be included, including interested directors. 9. Out of that 9, I need 3 disinterested, but only 2 are available. So quorum is not present. Okay. Have you understood this? Now, will your answer be different if you are told that F is also interested? See, nothing has happened to the attendance. Still the attendance is A, B, C, and D. But the minute you are told F is also interested, what will happen? Now B, C, E, G, rather B, C, E, F, G, and H. So 1, 2, 3, F4, G, H, 6. Now, when the number of interested directors becomes 6, it becomes 2/3 of the total number, total strength. When F is also interested, the total number of interested directors will become 2/3 of the total strength. Then the remaining directors being not less than 2 shall form a valid quorum. So the remaining disinterested directors A and B, D, though the quorum is not there, still the remaining directors being not less than 2 shall form a valid quorum. Okay. This is how you have to understand this idea. Hope this is clear. This was a question once asked in the CA final examination. Chalo. Now, the time is 8:53. I have come to one logical point. Let me stop here. In the next class, we can take up passing of resolution by circulation, etc. Because we have another 3 more classes to go. We have 3 more classes to go. We can do all that. Aram say, no problem. Any doubts, anything? I will give another 3 minutes. Now the time is 8:53, almost 8:55. Another 5 minutes. Let me take 2 to 3 minutes. I won't close the session. If anybody having any questions, feel free. Because yesterday I found that I was closing the session. After that, one student asked the question on secretarial audit. So kindly, any question, please raise today. Okay. Exception to interested director. That's what. Where the number of interested director is 2/3 of the total strength. So when F is also becoming interested, the total number of interested directors will become 6. 6 is 2/3 of 9. 6 is exactly 2/3 of 9. Therefore, the rule will change. The exception will apply. What is the exception? When the number of interested director becomes 2/3, then the remaining directors who are not interested, disinterested, not being less than 2, shall form a valid quorum. That's all. Exception to interested director again. I don't know which one you want. Which exception you want? 184(2). This is, I've explained it many times. This is what you want. Kindly be clear on what you want to be explained. Here, unless A, 1, 2 or B is satisfied, 184 will not apply. In this example, A is holding only 1%. No other director of AB Limited is holding shares. Therefore, none of these conditions of A, 1 and 2 or B is applicable. Therefore, even though A is indirectly interested through his wife being a director, Section 184 does not apply to the transaction. Of course, if you want to make it into some sort of a logical thing, or a reasonable interpretation, say you have to include the intention of legislation, you can. But strict interpretation, no. Okay, good. Thank you. Wish you all the very best. And slide 14. Hey, slide 14, fairly simple, yeah. Is this a slide? Just take a photograph of it and do the calculation, you will understand. See, any fraction shall be rounded off as 1. Meaning, see, normally 1.33 will become 1. Instead, we make it 2. Normally, 2.33 will become 2. Instead, we make it 3. So, any fraction will be rounded off as 1. 13th slide only, I gave an elaborate example. With this example, 13th slide will become very clear. Okay, slide 13 will become very clear. Please go. Later on, after I send my, after I give you my notes, go through this. And if you still don't understand, in a later class, I will explain to you. Thank you. Wonderful. Good. Have a great evening ahead. And see you again in the next class when we'll go deeper into powers of directors and meetings of directors. Thank you very much. Good night.